welcome to the Stock Market Morning Prep video for Friday, May 30th. Markets grinded higher again, making new all-time highs. We are now officially, we hit that extension that I was explaining and showing you for the last several weeks. We are at the second extension, so if that doesn't make you worry, I don't know what would. And I would definitely use caution. We sit in front of the screens all day, and if you're trading on a regular basis, you'll know exactly what I'm talking about. The index is moving. Virtually no stocks other than a handful of the high beta names are moving, such as like Apple and a couple of Netflixes and stuff like that. If you don't trade them, that's another story too. But we are now at this area where once we broke that 1900, I kind of figured we would push higher because there was a lot of stops up above 1905 to run this market up yet again on very, very low volume. So where do we go from here? Well, we're going to need new buyers now because the markets have run the stops through the 1900, the 1905, 1910, and of course 1915, 1918. So we need fresh buying here, and if we do not get fresh buying, then I think the markets will be ready for a move lower, which it would be so healthy for the markets to roll over and at least correct 10, 12, 13%, because the markets are, let me put it to you this way: when the markets decide to correct, it's going to get nasty, and it's going to get really nasty, and the risk is going to happen to the downside extremely fast. So you have to realize that. So why am I saying this? Don't put on a lot of long trades on. Don't carry a long book, and if you are, hedge the book, meaning your account, because you are going to be vulnerable for any downside corrections. Now, we see continuously for the last several weeks, and I showed this to you yesterday, that we have a huge spread in yields and equity prices. This is not sustainable, especially when you have yields follow equities and now they're diverging. This is unsustainable, and this is why I want to bring out the warning flags. Now, of course, I sound like a broken record, and are we shorting the market? No, of course not. We're looking for long entries. We're looking for good quality buy setups in this uptrend, but stocks that are not, or I should say that are at least at a decent discount to where the market is trading. We're not looking to buy stocks that are hitting all-time highs again. No, that's ridiculous. We don't want to do that. So we're waiting patiently for the market to at least give us a signal, and or have stocks that have maybe sold off and now are basing and trying to break out of a base. Now, it's far and few in between at the moment, but I do think starting the new month, now we're going to get some activity. Now, we didn't have any volatility this month of May, which was very surprising to me. We are at a seasonal time of weakness in equities, where we are seasonal time of strength in bonds, and we continue to see bonds getting well bid up, as well as, believe it or not, the Japanese yen, and even the yen, which Bank of Japan tried to talk down their currency, and that actually helped fuel equity rally the last 4 or 5 trading days. But the yen is continuously bid up, along with bonds. Again, that is going to be really the main warning sign here. And with the 10-year continually making new lows and equity diverging away from the 10-year, you have to use a word of caution. Remember, I don't know what the catalyst would be to knock this market down, if any. And I'm not looking for. I'm just a technical analyst, trader, trying to bring the best analysis to you every morning. And it could be a broken record that this could go on for days and days. But I want you to just use caution, and please, if you're heavily long your trading account, definitely use some protection. Okay, buy some protection. Use the puts to your favor. The volatility is extremely low. It's well worth it. It's well worth the expense, because you really don't want to be looking at a market waking up to the mini futures contract down 20, 30 handles. And that can happen. It can. Not saying that it will, but it can. All right, so let's get right into the analysis. Nothing has changed here. You can see that we have the inverted head and shoulders, the ascending triangle. We have a big cluster up above along the 200. So really, that's going to need to break back above it to sustain any type of equity weakness in the U.S. here. Okay, so but it's good to watch because we really need to know where the yen is at the moment. Now bonds, as we know, we have the 1272 extension will be our first target. We have the high here that we challenged, and now kind of flagging back into it. Are bonds extended? Sure they are, but I think there's a big short squeeze in bonds going on. We have the crowd, meaning the speculative retail crowd, heavily short bonds. And if you look at the commitment traders report, you'll see what I'm talking about. So by heavily being short, as a contrarian, you need to be long bonds, and that's exactly what's going on. Now, I'm not a bond trader, but you need to know what bonds are doing when you're trading equities. And the second extension would be the 1618, which coincide nicely with the inverse head and shoulders target of 142.27, as we all know. So bonds taking a little bit of a breather. What's going to happen today? It's anyone's guess. It is start of the summer season. Usually we get a bullish bias to the upside, but in this time we have just about 8 trading days. Markets making new highs almost every single day on no volume. I think it's anybody's guess here. It can happen. We can move lower. We can move higher, and that's not much help to anyone. But all I'm saying is please stay on your toes if you're trading for today. 1618 extension hit right, literally, guys, right to the penny. The 1918, we hit it right to the penny, not a penny more or less. We hit that extension. Now where do we go from here? I think risk is still to the downside. We have virtually no volume here on this whole move up in the last 8-9 trading days. So use caution. And again, I would not be buying stocks. I mean, they've already took out the ran the stops for the 1900, like I mentioned, in the 1910, 1918. I don't think there's many buyers here. We're going to need some new buying to push this market higher. Okay. Transports again made new highs yesterday on virtually no volume. Yeah, I think the other day was a capitulatory top, but we have yet to see the transportation sector sell off. I think this is going to be a great short trade, but we do need price to make lower lows and lower highs in order for us to start looking to get short. Now you can nibble short, of course, but you just need to have a tight stop above. And without price telling us, other than maybe a possible capitulatory top here, let's wait for something to come in. You go and you dial into, the Union Pacific, the FedEx, the UPS. They're all extremely overbought and overextended, and they are in dire needs of pullbacks as well. Okay, IWM, to me, if this doesn't still look bearish, I don't know what does. This is a very bearish chart. Low volume, as you can see here, just alone in the 5 trading days, we have had low volume, well below the 50 on the average. IWM, if we really start to break down, take out this 50 below, I would start looking to short the IWM. I think IWM is the best short if you are an index player. I would be looking to short IWM. And lastly is the Qs. I wouldn't short the Qs. We have Apple, as you know, with the split and the new iPhone 6. And Apple's been literally on a tear for the last 6 weeks. I personally think it's a bit much and far-fetched. I don't trade Apple. I have no desire to. But as you can see, it's a cult stock, and everybody loves to be in Apple. I would stay away from the Qs only because it's heavily influenced on Apple. Okay. When the markets start to move again, we're going to start looking at. We're going to dial down into some sectors like I've done. But this last month in May, really, there was very minimal movement in a lot of the sectors that we follow. But now we're starting to perk up. So we're going to have some real good analysis. We're going to have some fantastic trades coming in June. I can't wait to start the month next week. And remember, we have non-farm payroll numbers that come out next Friday, so that's going to definitely be a market mover. Remember, guys, and one thing I forgot to mention, is that we had a negative print in GDP. Okay, so it's the first time since 2011 we showed contraction in our economy. So that is not a good sign, but they've obviously discounted it based on the weather. Okay, I'd like to see the revision on this, but we have a negative GDP. You have to be careful here. Remember, once the euphoria is over, there's not much left to push this market higher. So just be careful, okay? Have a great weekend, everybody, and we're going to have a big update, and hopefully we're going to start moving around. I'm going to be looking for some sector plays, and of course I will put them out to you as well. Have a great weekend, and we'll speak to you on Monday.